my side. Just let me know you can hear and see me okay. That would be great. I think we're streaming live on YouTube now. That was part of the drama, but there is another little thing going on as well, which is proving a little troublesome. But we'll work through it, as I said. We'll try and deliver you something, despite the fact that we're a little late kicking off, and I do apologise for that as well, and appreciate you being here. So let's put this important message up. Let's see if it'll stay for more than 2 seconds. Thank you very much for popping in. But of course, remember this, we are looking at live markets, usually now at the end of the session on Inner Circle. Please remember to do your own due diligence on anything that you see or hear. Make sure that you follow trading plans, of course. Make sure that you manage risk on every trading action. It's really important. And okay, and that's on entry and exit, of course. So as I said, we're going to be looking at the markets later on in the session. Obviously, we've had a market wobble recently, but we're going to ask the question, are the buyers coming in at least to some assets? There is some key data out in what is a shortened week because of Thanksgiving Day tomorrow in the US. Fed expectations are very fluid. They seem to change radically day on day, day in, day out. We're going to have a closer look at gold and crypto and oil. The former is doing great. The latter two are looking a bit precarious. And of course, we'll have some charts to watch along the way. Thank you very much for popping in. And the heads up that you can hear and see me okay. Thanks for the heads up also on YouTube. For you guys watching on YouTube, either now or on catch up, thank you very much for popping in. Don't forget to click a little thumbs up, like button, and of course subscribe to get notified of future things coming up. Oh, this is an interesting session to put together, really. I wasn't going to do this topic, but what I was doing is I was sort of reviewing. I was reviewing what actually traders want, not least from a business point of view, but also just because it's a little while since I've looked at this. It wasn't that long ago I did a what traders need, but there is often a disparity between the two. Some of it is internal, some of it is external. So we're going to pick it apart today. And why it matters is that what is going on with whatever's on the bottom of this screen. You don't have to just put up with the with whatever this is. What's that about? Anyway, so the goal isn't to change everything you do, nor to start from scratch, or necessarily the amount you do. The reality is that many of you put in lots and lots of effort. But the question is the effort that you're putting in, effort in the right places. And perhaps if we rebalance things a little bit, it could increase your potential. The reality is, and for various reasons I'm going into, most traders chase what feels productive, not what actually is productive. And sustain by that, I mean what is sustainable, what is going to serve you well on an ongoing basis. And this isn't a deliberate act. It's not. I don't subscribe to that everything is self-sabotage and nonsense that a lot of people talk about. There is some in there, but more so, there are psychological challenges there, but it's a balance of circumstances that are going on in your world, not least the time that you have, but also the results you're getting, and of course then these are the things that matter as well. Okay, so I've put together this hierarchy of trading wants, and we've started sort of from immediate gratification at the top to deeper long-term needs at the base. And so if I listen to what people want as a marketer, as an educator, as a coach, the way I'd be listening would be very different. But the reality is that this often is the case, that number one priority or number one thing that people would like right now is they want someone to trade right now. Show me a chart, tell me where to trade it. because that's easy. It devolves responsibility a little bit, and it's immediate. Most importantly, so that immediate gratification. Next in the hierarchy, I did a stack of research on this, but next in the hierarchy is the trade later. So the watch list, when and where to enter. So it might be things like charts of the day and stuff like that. Would be that sort of thing. Also in the trade right now category would be things like trading rooms and stuff like that. That's why they're so attractive. So that's why they seek them out. Or how I made $5,000 in 5 minutes. All of that sort of stuff. It's immediacy. It's immediacy. Then we move down to sort of other things in terms of people, the things that people ask. So give me clarity on a trading setup so I can build strategy. How to exit well in positions that I've got open. What might happen next? It could move market sentiment. What will be coming up in the coming weeks and months, particularly if you're looking a longer term. What's happening to markets during a news event, and then subsequently what happened to markets after a news event. The former is more important than the latter, of course, because we've got the three things there in relating to market events. So we've got the what could happen next, which includes market events, what's happening during a market event, which means that you may have to take immediate action, and then what happened after the news after a news event. Really, the function of that, and these all have different functions. The function of that really is to build sort of general market awareness about how markets might respond to particular events, etc., etc. And then usually last on the list is how can I better manage my emotions during trading now. Although that's often from a what people say they want, the reality is if we look at how the want translate to activities and time and effort and energy, this tends to receive very little airplay in comparison to this. And this is what that session is about. Sorry, this session is about. I don't like the fact it's chopped it off the bottom. And why has it got that stupid thing? I'm going to have to just ride with this. Hold on a second. You can probably do something about that screen now. In all of the nonsense that's been going on, let's just. I wonder if I've altered the background. Give me a second. Let's just do that. That makes it better. And let's just make sure. Oops. Oh, there is something very, very wrong. Anyway. Right. Okay. You should see the whole screen now. Right. So what I've tried to do with this is give you a little handout, and I'll explain the reasons for this handout later. I'll try and attach that, but download it as quick as possible, just in case. Let's see if it loads. Right, okay, if you pop into handouts now, you can download this. So the perceived importance of this, and by importance, I mean the attention you give it, is these essentially is what happens, okay? The actual value is, of course, much, much different. If we look at what's going to help in terms of sustainable action, things like during and after news aren't really that important. I'm not in terms of creating the biggest difference. Now, I'm sorry, I expressed that wrong. It's not that they're not important. It's just that in terms of the difference they'll make, obviously clarity on trading setups, emotional control, how to exit well are all very, very key. So that's what I want to sort of revolve around. The difference between perceived importance, and by perceived, it's meaning what you choose to spend your efforts and energies on, which is high excitement, low transferability, which is good for attention, not mastery. And I've sort of put a few things there that will help out. And the whys and the wherefore. So, for example, that after the news, it may be a bit of post-event insight that's going to allow you to assess what risks may be next time it comes about. And there are some things that are really, really short-term and become redundant almost after, like markets during news, the trade right now. etc., etc., apart from demonstrating from an educational point of view. So if we look at the psychological drivers of traders, much of it is out of your control. And so what tends to happen, I thought about this quite a lot, is traders operate um, in a tension between immediacy and mastery. There's no doubt that most of you on here that are listening to this have heard me bang on ad infinitum before about all sorts of important things. And there's no doubt that I have no doubt at all that you would see the importance in mastering a trail exit, for example, or being aware of and taking action on potential economic events before they happen, and evaluating your performance of particular strategies. So I don't think there's, but all of those tend to be more in the moving towards mastery. Those of you part of the TIQ group, watch out for something really special I'm going to announce tomorrow. And what we are, but there's also some immediacy. We like the short term hit. We like the certainty. We like the tell me what to trade now right now. And this is neurological in that we've got a dopamine loop going on in that we've got a short term feedback loop here. Which is the trigger is tell me what to do. Something happened, give me it. We take action on this and we get a reward. And then this continues and continues and continues and keeps us in there because it gives that immediate kick. It be that a yes, I've won, or be that I've got X dollars. So it does feel immediate. That there is something about an immediate reward that is quite important. So whereas when we look for mastery, it's putting those things in place that are going to serve us well on a more sustainable basis. It's a deeper desire for control and confidence. So help me understand setups, exits, emotions, and then put things into place that are going to mitigate the risk to some degree, and also put some things in place which are going to help benefit. So invariably, this is competence driven rather than being dopamine or in other words, emotionally driven. It's slower feedback. You don't get that immediate kick. But it just builds longevity in terms of action. And if that action is good, then it obviously breeds sustainable results. So what you experience by going towards the immediacy as perhaps occupying more attention than it should is quite normal. It's human physiology, but it's also some psychology in terms of the kick that you may get if it works out. So the reality is that all of those things on that list doesn't mean it's all broken when you just throw it all out. It just means it's biased in the wrong way. You'll notice on that list that maybe you've downloaded. If you haven't downloaded, you can go to handouts and that one's hierarchy checklist. That within those two columns, there are none that are zero. There are none that are not important. There are none that don't have the uses from time to time. It's just perhaps you need to rebalance the level of attention and time that you may be giving to what it is that you're doing on a day-to-day basis. And that bias is reinforced by a number of factors. So not only do you have your psychology to deal with, but there is online education via social media. You see click-through rates and watch time are consistently highest on live trading rooms, on market reactions such as I made X in Y days, today's trade videos. And of course, this plays into, for example, a YouTube algorithm that provides more and more and more and more of that content. So if you so trade setups are good in terms of strategy design, and And there's nothing wrong with going through the I made the X in Y days or the today's right setup, today's week to watch is this. And there's nothing wrong with doing that, but make sure again that it has its balance with making sure that you do some of the things that are in the some of those things that are in the sort of longer term pot as well. Educational messages. Look, you've all been battered. You're going to have a gazillion Black Friday deals. Who knows? I might even come up with one with myself. Certainly, go. I've got one incoming. Keep an eye out for. But just watch what they're promising. It's never easy. There's always some work to do. You're never going to make a gazillion dollars in 5 minutes. But you've all seen it. You've all seen it. So I could put up a an EA backtest and see what I could say. See, there you go. There's that marvelous equity curve for this 2 years backtest. Not talk about the fact that there's often a disparity between what happens in backtests and live markets. Not reference the fact you have to learn some stuff in terms of how to put it into place and how to monitor it effectively. And I could put some really big numbers up there. But that would be how you might market such a thing by what's the word I'm looking for? By stressing that it's maybe not so easy. Maybe you have got some work to do to learn how to do it well. That there is a process to take you up, and that includes trading at low volumes and then starting to scale when you've got some certainty that something works. But that's not the educational messaging you'll get. Why? Because it doesn't sell courses. Broker sales messaging, you're going to hear lots of things about wonderful leverage and getting a professional account and all that sort of stuff, and spreads this and spreads that, and free swaps and all that sort of jazz. The reality is that your success in trading is not going to be due to spreads or swap. Your success or otherwise in trading is going to be to do with the other things that are less immediate. And then, of course, you've got the financial media. CNBC, Bloomberg, Reuters, MarketWatch, Traffic, and all of the sites, traffic peaks during live events. So things like CPI, the FOMC, interest rate decisions, today's picks. The idea is you create the buzz that feeds into immediate wants, and you get the audience there. And of course, audience equals ratings, ratings equals ticks. Ticks make businesses happy. So not only have you got your own psychology to do with, but that is fed into through a fairly biased through a number of things, through screen, through literature, and through just about everything that you come across that are going to feed into your immediate action bias. So, and look, as I said before, and I want to reinforce this, it's not that you don't know that you need to do this stuff. And the reality is that you do. Did you download the once hierarchy checklist, by the way? So you do know that it's important to measure performance. You do know it's important to make sure that you have a strategy that's unambiguous and specific. You do know that you need to focus as much attention, if not more so, on exits than on entries. And so if you do know that these things are good, and you do recognize perhaps that maybe your attention isn't where it should be as much as it should be, and again, stressing that there's nothing wrong with checking out a chart of the day or a live trading room or a live market update or a new strategy that someone says is going to make them a gazillion. So there's nothing wrong with doing that, but it's got to be balanced amongst those things that will and actually make a long-term sustainable difference. So what I've done is a sort of, I've made that once hierarchy checklist. Just open it up if you will. So what I've done is I've just done this. I've sort of given you the perceived value and the real value. But what I want you to do is I want you to put your score in there of what remember, perceived value is about the attention and time you give something. Your real value is what it actually contributes. Now, it's a pretty rough thing, but the reason for doing it is this is all about awareness and just changing behavior slightly to take you to a slightly better place, okay? So go through this. Go have a go at it. If you haven't downloaded it, if you can't download it, email me. If you haven't downloaded it already, then why not? Why not you do it? Give it a try. It'll take about 2 minutes with a cup of coffee. Score yourself on a percentage of your time. So, or you can. That's what I would do. Divide your time into percentage or minutes. In fact, that's probably better. Let's do minutes a week, and then work out whether that in work out whether that's an appropriate use of minutes. I've got a mini course that I did. It was really popular. It was just a like a 3 unit course, and there was a time audit for time management for traders. Really popular. So many people did it. It was only like a handful of bucks. It was only like 40 bucks or something. But it was the feedback I got from that, from people actually doing that exercise. What it tended to do when they did the exercises in that mini program was it gave them it meant that they weren't actually spending more time. Once they actually did a time audit and then removed those things that weren't contributing and put that time into things that were, then essentially the net time spend on these activities is often less, and at worst just the same. And of course, they're doing it on the right thing. So that's what the aim of that is. Put me an email. I'll see if it's still live somewhere. It might be. I might put it as a Black Friday deal. Hey. Right. Um, once you've the reason I'm getting you to do this checklist is it just um, with any of the things that you're going to work on from a mindset point of view, awareness is the key. If you know where you are from the get-go, then you can sort of put some things in place, put some interventions in and changes in behavior. And then but often the awareness, oh look, I am doing this really. Maybe I just need to make sure that there's lots of little techniques you can use. I've seen people use, those bands you can put on wrists, and you just give them a little tweak. And the traders I knew do that. Did that every time they were tempted to not do their whole um, tick list before they got into a trade or move the stop. They would just click. For one guy, it would just be to click this bracelet, and that would a band thing. That's fine. You don't have to have I actually made some company I was running at the time was Horizon Professional, and I made some sort of branded bands, um, which were a nice sort of giveaway. Anyway, I digress. But the key is awareness. Once you're aware of something, you can do something about it, and then you can remeasure it to see if it's moving in the right direction. So what I want you to do is go through that list. I want you to give it a shot in terms of say, right, okay, this is the number of minutes I'm spending on this. Does that need rebalancing? And once you do that exercise, you're going to see pretty clearly. So in terms of an ABC, this is what I would check out that inside that awareness that this is possibly an issue to work with. There's 3 small rebalances you can start this week. So you can replace 15 minutes of signal scanning with reviewing your trades. Okay. Or those of you who have already got the signal scanners, that should be saving you a heap of time looking through 27 FX crosses and seeing them all in one place and being able to say, hey, that's cool. We know exactly what to look at. What the heck I was going with this was so I've got a scanner open. Put a scanner in. So this is what I mean. There aren't many better than this, but this is something that again I used to do, something that the hybrid traders are working on, take it to the next level. Stop it. Still a bit twitchy, you see. Let's just see if I can get this up. Oh, it's blanket. Give me a second. It's the one that gives notifications. There we go. So that looks at, I think it's 27. 27 crosses and you're after lots of greens, or if you want to go long, lots of reds if you want to go short. So at this stage, there's nothing really radical. Maybe the Aussie yen's worth having a little look at, so we'll just click on that. So you can see there, it's just pulled back from a high from earlier in the day. A nice trade earlier on in the day with increased volume. That was a very nice trade. So now it's saying, oh yeah, okay, there's a few things in place, but we need to wait for some more. And how long did it take me to find that opportunity? How long? About 18 seconds. Yeah, and that was with me opening the scanner as well. Or I could look at 27 different charts. So look for things like that that save a heap of time. I should really put my email address in the for those of you who haven't got it. And there's a commodity one, and I'm working on a share safety one as well at the minute to make it. But that's the sort of resource you need to rebalance your time. If you think about it, if you had to look at 27 charts, let's say you've got a process and you can look at maybe you might be able to narrow it down. You can see maybe the USD is looking pretty strong, so you know to have a look at USD crosses. You maybe notice one of those. All of them are doing well, except maybe the Aussie yen. You think, oh, that yen looks pretty good today. It's doing well against the USD, which is doing well against everything else. Therefore, let's have a look at some yen crosses as well. By the time you've looked through 8 or 10 charts, that's probably 20 to 25 minutes, and I've shown you how to do it in around about 18 seconds, 25 seconds if you did open the chart to have a look. So signal scanning is good, but only if it's with purpose. And the more you can put in place that's going to save time to do that, the better it is going to be in terms of making sure that the extra time that creates is going to be spent doing on some things that are going to be ultra useful. Yeah. Quickly, John, in terms of answering your question, can I show you how to make the magic number? So if you just go into inputs in any EA, and that includes your entry-only EAs, you'll see an input field called magic number. Let's see if we can do this. And all you do is make your own one up. Stretching. Yeah, it's very volatile today. It might have to be another time for that, maybe. We'll see if it comes up, and if it does, it'll take 1 minute. Journey motions are exit, not entry. So it's not. Remember, you need to switch your entry focus to what happens throughout the life of the whole trade, because invariably entries isn't where the number of people I've coached over the years, which has been many. I would say if I had to, that there's probably the entry issues, maybe timing issues. So maybe a little bit of an itchy trigger finger, or maybe procrastinating too long to get before they get in. But that's not where you lose money. It's just you make less. Where people lose money and lose significant amounts of money or give massive amounts of money back to the market is because they make a dog's breakfast out of exits. So I would say it's not even 80-20 exits to entry work that people have to do when they're being coached. Maybe even more than that. So it even breaks the Pareto principle. It's so important. So if you are measuring not just the numbers, but how you're feeling and what you're doing as you're doing it, and it's worthwhile doing this for a finite time, then make sure you do it at exit as well as entry, because that's invariably where you might want to rebalance. The other thing I would suggest is, again, for discretionary traders, is maybe have a look at one of the strategies you'll be using. Is it a trend continuation? Well, whether it's a Bollinger Bands or whether it's a breakout. Okay. Choose one. Pick it apart. Absolutely pick it apart. Ask a question of every single statement within that. Is it clear? Is it unambiguous? Is it specific enough that there is no doubt about what I should be doing and when I should be doing it? And then trade that one strategy for the whole week. And at every entry, you ask yourself, are there any questions remaining? which you can usually do in terms of making a judgment on how certain you are about a particular trade. So things that go around that, obviously, making sure there's no other key levels in proximity which should be in there, making sure there's no economic events that they're in there, making sure that you're not overexposing to particular assets, on number of trades got open, all of that sort of stuff. So if you really hyper focus on one clear setup and ignore everything else for 7 days, that's what mastery is about. It's about that deeper dive. It's about digging into how good really is this, and how able am I to replicate the way I'm trading it time and time and time again to the letter. So there's no ambiguity. You should be able to give your trading plan to someone else, perhaps who doesn't even know trading, and they should be able to trade it for you. It should be that clear and specific. Does that sort of make sense? It's really that important. Did it open? I don't know where the strategy test. No, I'm just looking like this. Yeah, John, if I can do that tomorrow, I think you're on one of the sessions tomorrow night. P6, are you part of P6? Or you're advanced? But invariably, if you go into inputs within the EA you're trying to do, you'll see where the magic number goes and just make your own up and then make a note of which EA it is. So it's not a special sequence or anything, but the key thing is you put it in a sequence which makes sense to you. So your first EA you might call 1001, the next one 1002, 1003, and then you create an Excel spreadsheet that says 1001 is session smasher version 2.5 euro USD 1 hourly. Okay, so just keep a record so you know exactly what it's trading. But have a look in inputs and let me know. Just put me a message in Discord. So I think I've answered every other question. There's lots of agreement and sort of this resonates with me and that sort of stuff going on. So, but make sure you walk away from this session taking something with you and taking some action. I'm sure you could come up with those of you who are doing the trading AI course, come up with, you ask the question. I'm trying to rebalance my trading from the immediate to moving towards things that are going to make a difference long term. Give me 10 potential things to have a look at, or 10 small things to have a look at that are going to help me start to rebalance. Make them specific and unambiguous. Okay, there's a prompt. You could even start it with, "Hey chat, you are my trading coach." Put it into the role. Those of you who did that course know how wonderful that can be. Have I got time to show you? Okay. Let me just show you. For those of you who didn't do that course, give me a second, and we'll actually do this. Okay. So if none of those resonate with you, let me just open Chat GPT. Right. Okay. So you should see Chat GPT. Okay. I am a trader and want to rebalance my efforts and time into things that are important to move towards becoming this will be fun, becoming a better trader. You are my trading coach. Suggest 12 things, 12 small things I could work on. If you've never seen this, and you've not or you've not done the course, prepare to be. There we go. Right. Okay, so these are your 12 you can walk away with, okay? Oh, stupid thing. Let's done it again. Well, maybe you won't get your 12. Let me just see if we can open that. Strategy testing. Oh, I don't believe it. Okay, my mouse has gone all wacky again. Right, let's try and open another one. Okay, so there you go. It's giving you 12, okay? So these are your 12 things: process and plan, your daily routine, trading plan summary, set a week theme. You want these? See what you get from attending my sessions. The bonuses just keep on coming. Yeah, it is pretty wow, isn't it? Yeah, those are you. Those who did the course were pretty wowed by what they learned how to do. And obviously, let's call this 12 things. Okay. I think it's a great way to do things. I'm running the course again. Well, I'm now running the coding with AI stuff. Um, I guess I could give access. Email me if you want to do a chat GPT or an AI and trading course. I might be able to put something together as a package. But let's just say this. Couple things, downloads. Right, I'm going to try and add it to them. I think I'm probably going to close it to it. Okay, I'm going to try and add it to Handout so you can download it. Choose file, 12 things. Okay, it should be uploading. Yep, there you go. So if you pop into Handouts now, you should be able to see it. So there you go. Not only have you got my three things there, but you got another 12 to work on. Right, let's have a look at markets now, shall we? You're welcome. Yeah, I know. It's pretty cool. Let's have a look at markets now. As I said, the thing is going to have a look at. Um, yeah, make sure you follow through. Take some actions on this sort of session. It's really important that you do that. So let's have a look at a few things. Let's have a look at the Nasdaq. So you see, we had this fairly significant pullback, almost correction territory, but the bounce over the last few days has been significant. A couple of reasons for this. Primarily what's happening with the Fed, essentially. Let's do that because that's part of the deal here. If we just look here, so we finished earnings, they've come in really well. We had the AI bubble perhaps isn't quite as bubbly as people thought, though it's still under a little bit of pressure. But this, okay, so the CME is down. Don't be ridiculous. Anyway, okay. So when last we met, the chances of a December rate cut had dropped to around about um, 44%, down from around about 90% a month ago. And then all of a sudden, the whole thing changed its mind again, and we saw the futures rise pretty rapidly up to around about 70%. So there's now a 70% chance of a December rate cut. That helped the markets. Part of the reason for this was general sort of economic data wasn't very good. The chance of a rate cut. This is the decrease in chances of a Fed rate cut. So we've got this really nice bounce over the last few days. And because of the increased chance of a Fed rate cut, we in December we've seen the US dollar drop off a little bit. The US dollar index dropped below its 200 MA, which of course I talked about this. Gold was coiled and is moving towards that 4,200 level and put as a price target on Monday's market update. By the way, if you're around about tomorrow lunchtime, then pop in to Pop into the live update at 12:30 tomorrow. I'll give you the link. So let me just get, I can't give you the link, can I? Can't see a link. Okay, I'll have to send a link out. Those of you who've been part of that group before, watch out. I'll send a link out later. Right, okay. Okay, so if you watch it on YouTube, there'll be a link there as well. So gold is heading back up to 4,200. I think it's worthwhile being patient for right now and seeing if we can push through. Now, one of the things about this week, of course, is the screen's going la la again. I don't want registrants. I want this is the data has all been chunked up. It's going to be a really interesting night tonight because, of course, there is we had some CPI data come out this morning, which was hot in Australia. There's no chance in hell that we're going to get a rate rise probably in now until February at the earliest. A combination of strong CPI and good jobs data has really killed that. But you can see later on we've got it's disappeared. Okay, so we have got weekly jobs coming out. We have got durable goods coming out. We have got Chicago PMI and we've got the oil inventories, which are going to be really important as well. The RBNZ cut rates by 0.25%, which was expected. But tomorrow, yeah, tomorrow is Thanksgiving Day. So outside of that, there's some CPI coming out of Japan and Germany on Friday, and some Canadian GDP, and some PMI out of China at the weekend before I move Bitcoin. So tonight is really quite an important thing in terms of data that's coming out. So just watch that. I thought there was more than that. Maybe some of it's been taken away. We're still a bit slow in getting some of the data out from the US government data, in fact, after the shutdown. But yeah, quite a big night tonight. Of course, with market shut tomorrow, there's going to be a bit of repositioning at the end of the session as well. So it's sort of going to be interesting from that point of view. Nothing there really that's going to. I guess if the jobs number is strongish, in fact, if the jobs number is weakish, it'll probably help gold. Sure, with that 4,200. But there's momentum there. Look at other asset classes. Copper is looking interesting. Really, really strong session going on today. You can see there since European Open, it's just gone very strong to the upside. I would be keeping an eye on this 522 level here. That's really important. We're trading at the top of the session, which is really quite impressive. What's not impressive is the price of oil. So you can see this downward trend channel. This bottom blue line here is 4-year lows. So there is two things that could obviously happen from here. It could bounce off this level. It's had 3 attempts to breach it and hasn't. It could bounce off this level. It's bounced off 57.72 and moved to the upside, but this stage it just looks miserable. I'll be taking that trade off. Okay, let's do that. Let's do that. In preparation for tonight's EIA session. Now, the other big story of the week was Bitcoin. The big story of the last 2 weeks. So we saw a 30, what did it end up being? 36, wasn't it? Yeah, 36% drop from its high, all the way down to 80,000 change from 126. Massive drop in Bitcoin. A little bit of recovery over the weekend, which, to be honest, was probably short covering. Maybe more so on Monday. Yesterday was a dim day. Today we're at the bottom of the range. So that looks really, really precarious. I did quite well out of this, actually. This is my at least half a position. The other position did well. So this is merely EA testing. Trade 0.05 a lot on Bitcoin. But you can see here that we've got we've got a key level here that looks interesting. Around about 85,574. Breach through that probably takes us down a couple of thousand to 83. But it is that 83,500 level which looks really, really important. If we get a breach of that, we're already at lows. Put it on a weekly chart, we're already at lows not seen since the early part of the year. And looking sort of February, March, it was around this level. So a breach of that, see that all the way down to 80,000, breach of 80,000, we could be just completely capitulating. I mean, 36%, to be fair, is a bit of a capitulation. Let's just have a whiz around some of the little bit of yen weakness today. Let's just have a look at the, just interested in the futures very quickly. My automatic thing can go through that. Yeah, so you see there the futures are looking fairly perky. Yen cross is, sorry, the yen futures are not looking particularly good against the US. Sure, here you go. If that link's new to you, it's a really good start point in terms of your first check of the day, just to see what everything's doing. Which you can see what happened in the US overnight, like so. Okay, really strong night the night before last, but followed through yesterday, and then that's a really good thing. And then just see what Europe's doing. And it was high. How high? Record expectations rise. Yeah, yeah. Oh, what was that green footsie thing going on there for? Don't know. Anyway, there was it's across the board on the major indices, DAX, FTSE, CAC, Caront, all looking good. Tax hikes in the UK, it's sort of interesting. Their budget is today. I believe that might be interesting. Just watch Taiwan, sort of the news around that. It's just something that's maybe. But yeah, it's that sort of market. We had 4 straight down days on the S&P 500. I think we've got 3 to the upside now. So it's just a bit of a wild ride, actually. Anyway, let's find some other charts. So the yen's looking weak. Don't particularly like that, but I will put this on here. This is like this because it's where I pitch my scanner. There we go. So not the scanner, the trader dashboard. 101.72 looks like a great level. That looks so technically important. We've had a pullback. We're looking at trend continuation to 101.72. And initially, I would say 102 definitely on the cards. 102.43 is a bit of a stretch. It's about 80 pips, but certainly that first leg looks good. Euro yen, likewise. It's interesting. So looking good. Let's pop on the GB pound since it gave me that scan. You saw the messages coming up there. So it's telling me that GB pound yen is looking good. It is actually looking good. So the scan has picked up that 206 could be a key level there. You can see there's the previous range. So we're looking for a breakout, possibly up to 2671. That's a really clear lineup to the upside. That's a very strong chart. Very strong chart indeed. There's a fear and greed index. Won't worry about that for right now. What we'll worry about is perhaps, because the other one it pinged up and I saw it, was the Euro AUD short. It does. Looks good. So that line at 178, right, nice round number to play with. Last challenged So now the low of the day beneath the low of yesterday. Edge factors in Euro Aussie. Yeah, that's why it's chucking up. I need to decrease that frequency. But you can see there. So when it's Monday's open. So challenging Monday's open. Now we've breached that. We could be. So what's in this? You'd probably put it around there. So possibly around about 25 to 30 pips maybe on that. But it's quite a nice setup. I still think I probably like the GB pound yen. Let's just put some pivots on here just to see how these correlate. Yeah, the correlation's a bit out. So it's not really utilizing pivots at this stage. But it does suggest that 206.44 is probably a good place to trail a stop if you're in this. Let's say you got in at 206.20. I'm going to make this my chart of the day. GB pound yen. But I will put on Aussie yen as well, just to double check. If there's agreement with if there's a little bit of, is it going to check the pivots on for me? Yes, it is. Okay, that has breached the pivot and he's ended up to the next one. Not quite as big an upside, but a cleaner upside of around about 35 to 40 pips on Aussie yen. Technically, that's probably a better trade. Nice key areas to potentially put your stop, sort of somewhere around this 101.40. If you want, at this stage, you're probably patient waiting for a breach of that short-term pause point. Yeah, that we sort of talked about before. 101.68, 101.70, somewhere around there. Okay, just quick flick through. Let's have a look at some of the big boys. I thought we had some of them open. That's the entry dashboard. There's an extra dashboard as well coming up. Watch this one tomorrow. I like it. 360 ASX just pulled back a little bit today after a rocking move to the upside. As I said, we'll do some charts today. Have a look at some how some of these are cooking tomorrow. I've been sort of interested in nickel. Zip's sometimes Zip had a bounce. Watch Zip. Watch this tomorrow. I'm going to make this my ASX chart of the day to watch in the morning. Breach of 328. Back over the 200 yeah. 200 EMA. And while we're doing that, I'm just going to quickly have a look at NVIDIA. Just AI stocks just still struggling. What's MU doing? Let's just check on it. See, this is all tech. All tech in the US. It's none of it's doing particularly good. Carnival Group. I think this is a really nice bounce. Still on a downward trend channel, so I want a little bit more in this. But the other one that I've been banging on about for about 3 weeks is the ETF that looks after rare earths, strategic metals, REMX. I like this. I talked about it when it was down here. We came and retested that previous resistance on the back of some fundamental news in terms of this rise has been staggering. There's no doubt rare earths are a place to be. So we moved up from $40 to $80, so 100% return. Had a nuptial retracement that was compounded by Trump and the Chinese starting to talk to each other again. There's a little retracement at the back end of last week. So look for 73.92. I'll keep that on your radar. Short term up to 81, medium term, who knows? And I was referencing airlines. Still some work to do on Southwest Airlines. 34.35 looks like a good level. So there's a couple to watch. Watch, as I said, in the. Oh, I'm just checking. Let's see if I can $15. Some work to do on LYC, and I just want to check on lithium stocks, which are having a good day at the office. early in the week. Actually, and I see it. 4% today. Wow. Nope. PLS of 8.4. Right. Okay. Here's your other chart of the day. So you already got it. We've got PLS, probably the leader in lithium production, actual production, not just to have in mind. 420 is the level to keep an eye out for. 470-ish, really nice run up in lithium stocks. The other one that we've been keeping an eye on has been LTR. Liontown are sort of stuck. Coming back up to relook at 160. So there you go. Okay, so there you go. There's some charts to have a look at. Okay, I hope that was useful and interesting. Give you a few things to have a little scan on, of course. And I hope that's been sort of useful, just challenge you a little bit, giving you a little prod. Got my email in chat there, mike.smith@joemarcus.com, or the other emails if you know them. Be more than happy to have a chat to you, tell you about what's going on, answer any questions, of course. Follow through on the activity I've given you today. If you couldn't download the handouts, let me know and I'll ping you them in an email. And I shall see you hopefully tomorrow at the live update session. If you don't get a link for that, it means you're probably not registered. So if you haven't got one, it's at 12:30 tomorrow. So if you haven't got one by when you wake up in the morning, let me know and I'll make sure that you do. It streams live on YouTube as well as go to webinar as well, so you should be good. Anyway, enjoy the rest of your Wednesday evening. Thank you very much. You're so welcome. Thank you very much for your kind feedback. For those of you watching in YouTube land, thank you very much for popping in there, whether you're watching it live or on follow-up. We shall catch you very soon. Apologies for the technical blip at the start. Thanks for being so patient, so supportive, and so wonderful. Go have fun. Bye-bye for now. Thanks, Michael. Cheers, Wayne. See you later, guys.